Alrighty. Guten Morgen. Let's see, where's the chat? Where do I have chat? Where is the chat? There's the chat over there. Hang on, just gotta move windows around. Let me get rid of this window, get rid of that window, close that app. All right, I think I'm good. I think I'm ready. Is everybody emotionally ready? Let's go. Piggy, can't you see? Sometimes your trades just hypnotize me. Hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Welcome to Forex.Today, everybody. Today we'll do technical and fundamental analysis with the overriding goal of teaching you how to put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Thank you for being here. Thank you for liking. Thank you for subscribing. Thank you for leaving comments. Thank you for treating me with dignity and respect and loyalty that you show me all the time. Thank you for working hard at this thing called Forex. And also thank you for being a client to Traders Way. If you are new to the organization, please visit tradersway.com, open up a demo account. It's down in the bottom right-hand corner. You can have an ECN account, you can have a fixed spread account, you can have a variable spread account. There's choices of platforms, but the thing is fast execution speed, load spreads, wide swaps, everything that you want, including world-class customer service and the business model of wanting a customer base that's educated and successful that can trade for years and years and years and years. How about that for an execution partner? Tradersway.com. So how you doing? Right now you can see we got pound recovering, euro weakening, kitty CAD recovering, yen neutral, dollar neutral, neutral to strong, Swissy neutral, Kiwi coming down, Aussie kind of going up-ish. So we kind of have a mixed bag today, not complete risk on, not complete risk off. Maybe, just maybe, if you remember, we had a decoupling last week. Well, maybe we're recoupling. Everybody likes coupling. So right now we have dollar moderately strong, well, yen moderately strong. Very cool. Take a look at USD. Holy smokes. Okay, holy smokes. Look at that. There's that big wowzer, huh? Wowzer. Wowzer. So we're all the way back to where we were. Which I think you should walk away and recognize that being a bull or a bear would have been helpful through this whole process. And if you were neither, if you weren't sure, you probably got punished. Okay? On got kicked out. That's how it happens. Okay, that's okay. But remember how we were talking about ranging before rallying. Okay, I don't think I said it that way. It sounds beautiful now that I said it that way. But yeah, okay, cool. Right on. Okay, a little tricky, obviously, with the politics. How about this one? This is the one we've been saying down for a while. even though there was no technical reason for it. And now we have a role reversal, which is a technical reason. And then, eyeball and support down there. Okay. Kind of interesting, right? Once again, nothing on this chart said down. There was no technical reason to expect it. It was seasonality-based retracement. Pretty cool, though, huh? So I'm sure you're following it up, doing what you need to do. I hope you're happy that it's not a shocker that it's happened. Okay. So if you have the down, 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 up, up play going, your target's going to be a little bit further down. You're probably going to retickle 120 to 120.50. Is that what you're thinking? Anybody thinking that? Okay. Remember, ask yourself, are you short-term short? Or are you long-term short? Okay, never get confused. Okay? Never get confused what you're trying to do. Okay? You have to choose one or the other. If you're long-term short, then yeah, you're thinking this will continue for quite a while. Others will look at this as a general setup for a long. Cool. Once again, I think the important part of this is the alpha that I provided to suggest that it was going to happen. Now, my suggestion is a lot like what your thesis would be. You're like, okay, I think there's going to be profit taking. I don't know if there is going to be, but that's the thesis. And now I'm going to use technical analysis to confirm or deny. So how well did you do in that process? Whether it was my thesis or your thesis, eventually you're going to be using technical analysis over and over and over and over and over again, simply using a scientific methodology. Does it confirm your thesis or does it reject your thesis? Okay, pretty simple. Okay, and this is on an hourly chart. So like on what point should you be on the clue train? Okay. Remember, I drew this, way up here, I drew this arrow. That's as far right as I could reach because the way that the chart looked at that time was like this. Okay? That's what we were looking at. That's how much information we had. So the projection would have been, well, if you believe this is going to double top. Oops, that's a little fat. Little fat. Sorry, big boned. So we drew it like that. Double top into this old bottom, which would project an old, whatever. And then you would assume something like this. Correct? This goes back to Thursday or Friday non-farm payrolls, maybe even earlier than that. That might have been Wednesday of last week. And so now, there we are. Can you see the logic here? Breakthrough, back, retest, continuation. Do you know it'll continue down? No, but that's what technical analysis is. That's what it tells you. Even way up here, double top. If you're a bear, you would expect a lower low. And in fact, the way I had it is you'd expect a bounce here first, then the lower low, then the lower high, then the lower low, then a lower high, then a lower low. Whether that's going to happen or not, nobody knows, nor is it really relevant. That's just the bearish point of view, and even a bull should be able to see that. Right? Yeah? Cool, right? Cool beans? Okay, Cool beans. Kiwi, 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 can't you see? All right, so let's go back. What is the gray zone here? The gray zone is us taking a look at here and then sort of down in here somewhere. Okay? And then, of course, you ready? Wait for it. So this is very, very interesting. Okay? Because we had here to here to here. Okay? Now here to what? What's going to happen next? This? Is that what you think? Well, that's what a full hardcore bear would believe. And if you're not, then you're always going to look for something like this. Okay? One or the other. I wouldn't mind buying it at 70. Okay? All right, let's take a look at this one. All right. Okay. Had some potential, might be failing. We don't know, yo. Okay. Okay. I don't know where you want to start your measurement from. Okay, I'll drag this across. You can see used to be support, might be support again. And of course, a failure here is quite amazing, actually. It shows you either US dollar has weakened or CAD dollar strengthened, and probably on the back of oil. And remember, oil was a bit of a shock there. Right? And therefore, oil was undervalued. Strange. I got that one wrong because fundamentally, we all expected OPEC and Saudi Arabia and Russia to get together and cut production. I'm sorry, not cut production, increase production, because many of those OPEC countries, including Russia, remember, Russia's the plus. So in OPEC plus, many of the countries, essentially everybody except Saudi Arabia, is starving to death, figuratively or even literally. And they're like, we need to produce. And through the new OPEC schedule, they decided to cut. And you're like, whoa. But I think Saudi Arabia's cutting so everyone else could overproduce and therefore pay for themselves. But again, does Saudi Arabia need to do that for altruism? Do they need it to do that to maintain the cartel? I don't know. But anyways, didn't see it coming. Or not that it wasn't a potential outcome. It just wasn't in the vernacular of the discussion, aka sentiment. Okay, going back, not long ago, dollar was gaining strength, yet yen was weakening. We're like, hey, that's a weird decoupling. Doesn't make sense, but it seems to be happening. And now, maybe now it's starting to make sense. What do you think? Even the mighty Aussie. Okay? Best case scenario for a bear off of R1 is S1, so that looks like 77.5 is a target for a bear. Okay? Breach the 55, up. Hit the 200 EMA, up. Work our way down into here. That's right, Master. Yeah, one would have technically expected it based on fundamental assumptions. And every once in a while, things that are likely to happen don't happen. And therefore, the technical analysis is generally irrelevant. So you're like, how could it go higher? How could it go higher than R2? I thought that was a profit zone. Yeah, based on assumptions that the market had, and it knows where overbought and oversold is. And all of a sudden we find out fundamentally oil was undervalued. So nobody gives a damn about R2 anymore. Maybe R3. Because fundamentally things changed, and that trumps technical analysis every time. Remember, you're not buying or selling billions of dollars worth of industrial, necessities because some technical analyst has an R3. Oh my God, that's 2 standard deviations from the. Like, shut up. We need to buy or sell oil. All right. So there's reasons for it. Generally, not how many standard deviations from a mean you are. Okay, from an average. All right, so anyways, you have to decide, is this down? Technical analysis tells us down to the 55, low or high, down to the 200. Okay, and then neutral zone. But then pivot point theory says if we're not going to make higher highs, if we're only going to go 1 standard deviation from a mean, then we can go 1 standard deviation below the mean. Okay, it's just a different type of range. Think about it this way. If there's a bullish range, okay, you paying attention? Write this down. If there's a bullish range because you have analyzed the market and you believe it's bullish, then the expected range is here to here. Okay? If it's extremely bullish, the expected range is here to here. If it's bearish, here to here. If it's extremely bearish, here to here. Well, it's generally the same thing. The only difference is the direction. But it's measuring the same information, 1 standard and 2 standard deviations from a mean. Well, what if it's not going to go make the higher high? What if it's not going to make a lower low, instead range? Well, then it's going to go from here to here. So you have 1, 2, 3, 4, 5 possible ranges, okay, based on market conditions. Okay, so much of your role is to figure out, what are we doing this week? What are we doing this month? And then fit the appropriate strategy into, option A, option B, option C, option D, option E. Which one are we going to have? Okay. Ciao. Nice, right? Can I get a like? Whoop, whoop. Can I get a like? Whoop, whoop, whoop. Come on! Kick down, come clean, don't be a holdout machine. Come on! Click the like button. Come on! What are you doing? Come on. Click it. Click it. Yeah, 100 people have not. Click it. Click it! Okay. All right, here we go. So, you have to follow the direction here. Not sure what you want to do. Once again, this is an R1 predicting an S1. Right now, we're just moving very tight. It's very tight. Okay? Look at projected bullish buy, projected highest exit. Projected bullish high, right? Exit. And now what? Well, I wouldn't, a normal buying opportunity doesn't occur until down here. So something's odd, isn't it? Isn't that odd? Well, this is the election, okay, post-election, end of year, and now what? Not a lot of conviction. So you have to ask yourself, what's the outcome here? A, you stay in here, so we'll call that A. A. B would be this, okay? Now, typically, we're not doing that time of the month, but whatever, we'll call that B. And then C would be this, okay? This is the range, this is the rally, and this is the continuation. Okay, not sure which one? Well, that's why if you're a bull, you're going to analyze what happens at these prices and understand the importance of these prices. They mean different things. Okay, a bear sold at resistance is done. Yeah, that's actually defined as resistance, 127.42.5. So they're done. That's done. 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 Oh, done. Okay, done. Which means it might be kind of late to just be planning something now. But maybe there's a follow-on. Okay. Beast, you guys trading Beast? Bottom range. Top range. What's your fundamental bias? Up. Okay. Now what? If you're a bull, buy. Okay. Buy. And that's it. That's it. So far, there's only been one buying opportunity in the month of January. Done. Okay? You see that? This is a mediocre setup. It's takeable, tradable, not on this time frame. Okay? But you understand, like, that's that. Enough said. Okay? So one way you could be doing this, and by the way, I'm not really that bullish guy on this, right? This isn't really what I would think. Right? I would have probably done that trade, okay? Maybe that trade, but this trade up here, I'm not that bullish on the pound right now. Not that it can't be. It's just there's too much unknown. Maybe I got to grow up and get over the whole Brexit stuff and the COVID stuff and all that kind of stuff. But there's probably just better things to be doing, right? Now maybe you'll get a higher return, partially out of it being oversold and partially out of it having the highest, volatility. But maybe I don't want those things. I don't need to make the most amount of money. I don't need to assume the most amount of volatility. I just want something I could say, yeah, this is going to go up this year. Okay. But so that's not my cup of tea, but you could be trading this, very standard, straight out of the textbook stuff. Okay. Okay, there's a few trades here. Okay. So even day trading, you had a great trade yesterday, and that's that. A couple days earlier than that, there was another trade. Okay. That's that. Opened hot. I mean, you could be front running here for sure, but then now you got on there and whatever up here, and then you could be front running here. There's a lot you can add to this. But remember, if you only look for obvious bullish opportunities if you're a bull. Okay, that's what we're talking about. Well, dude, that's what these things mean. This one opened low, but you might have done a front run, but I'm not talking front running now. I'm just talking like opens. The day opened on the exact price. So you're like, oh, look at that. Click. And would you buy it after a bullish engulfing candle? Yeah, 6 hours after a bullish engulfing candle? Yeah. And then you're sitting here like, well, I guess I could have front run tomorrow. But I'm not talking front runs. I'm just talking buying and holding. Okay? Once again, not the direction I would have been a big believer on. Like, I don't have a lot of conviction for that bullishness. Maybe later in the year or something. I understand this one better because I understand the fundamentals. I understand the OPEC cut instead of increase in production, how that would positively impact kitty cat. Okay, great. So based on those, general ideas of fundamentals, then you can go in and say, well, I'm a day trader. Mama, I want to be a day trader, right? Mama, don't let your babies grow up to be day traders. Huh? Picking guitars and driving big trucks. Make 'em be doctors and lawyers and such. All right. So you're like, I'm a day trader. Okay, great. Let's follow the rules of engagement. Cool. Well, okay. 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 You can switch this out and say, I want to be a swing trader, bullish. Is this any better? Well, this is a buy. This is a buy. This is a buy. Okay, and you're already on next week, actually. So what do you think? So far, day trading or swing trading? The thing I like about swing trading is you buy it and you're done for like, it could be weeks. Well, Kevin says instead of doing dollar CAD, use Euro CAD. Yeah, but maybe, but Euro, I always look at Euro just being dictated whatever the Fed wants to do. So they're a victim, if anything. Maybe something better. I would look at CAD yen. Okay. Okay. Cool. So anyways, bye. What did you do this week? I bought the CAD yen. What did you do the week later? I bought the CAD yen. Right? Like, what? What? You bought the, what do you do? Here's the sad thing, right? You're already doing next week's job. So what are you going to do next week? Like, oh man, Forex is so boring. It's you're doing next week's job now. So what are you going to do next week? Yeah, you're going to have nothing to do on Monday and Tuesday, maybe even Wednesday. So that means from Wednesday to Wednesday, you might have nothing to do. That sucks, right? Yeah, Forex sucks because there's very little to do. That's the problem with Forex. Look at some exotics. Oh! What happened to the Eurozar? Snap! Shut up! Yeah. Okay. Yep. Gone. Yeah, research. Research, yep. That's why the cool thing about Forex, like you don't quite see it. I know you're close to seeing it, but there's going to be points in your life where Forex is too much. So you have to, rebalance. You shouldn't have all your money in your Forex account. Because you could just the idea of diversification, right? Also, it gets to be a burden. It does wear you down like water over stone, because the account gets bigger and all that kind of stuff, and your lifestyle gets bigger, and all of a sudden you really have to hustle to maintain, right? And you're like, boy, things have really changed. Forex is becoming stressful. Well, you don't want to build up and become more and more stressful. So what you want to do is have your money work more and more for you. And that's why it's great if you're at day trading. I like day trading. I like scalping. But you really have to focus. You have to really pay attention, right? Swing trading and position trading and such requires very little time. Okay? So down the road, when you're like, okay, you want to take 100 grand out of your Forex account and you want to apply it and buy some sort of opportunity to make money, but ideally you're not just flipping a car or something, right? Because that's kind of probably everyone's first side hustle, especially if you like cars. You're like, I'm going to buy a smashed up Porsche 911 and I'm going to fix it up and I'm going to sell it and I'm going to make 20K, right? That's an all right side hustle, especially if you like cars. But then after a while, you're like, yeah, it's chicken feed. So what you'd rather do is like take your 100K, go to a bank, and the bank says, whoa, you put 100K down, we'll give you 900,000. Okay? Right? If you have good credit, 10% down to buy real estate, not a problem. Right? Not a problem. In fact, in this world right now, those kind of lenders and financiers are desperate to find people with stable income and high credit scores. I'm telling you, they're desperate. So what you do is you're like, oh, I'm going to take 100K out and I'm going to make an investment. Cool. Well, if you're a swing trader or a position trader, maybe even a day trader, depending on like if you do a market open and you sit on your trade for 4 hours, you have tons of time to do that kind of research. Right? Tons of time. Knowing that you have stable and steady income from your Forex account and some investment cash, like I'm just saying take 100K and you still have a bunch of other money in the account, but you're constantly pulling out and diversifying what you're doing. What you want is to have like, by the time you retire, you have like, let's say 10 cash flows. What'd you do today? Well, I own 10 cash flows, so I don't have to do jack. Can you imagine you're that dude? I think it'd be cool to build up that kind of net worth, and then when you hit retirement age, you buy a beach bar in some beautiful location. Like on the beach, you will always have tourists. Even on a rainy winter day, tourists will show up to stare out at the water. For some reason, we stare at it. Water. Look at the waves. Look at the water. Look at the waves. Damn, I need a drink, right? And boom, you're at the bar. So yeah, so what you do is now you own a lifestyle retirement. Huh? I read about a guy, 100 years ago. I can't remember now where I read it, but it's always in my mind. He was like a steel worker that wanted to be an artist, right? But he was a steel worker. You can't share your art with other steel workers. So anyways, he worked his whole career in a tough blue-collar job, making very little money, but it was tough and dirty, right? But he painted on the side, and the way I remember it is he didn't even tell his friends because they wanted to drink beer and watch football, and he's like, well, I'm really into watercolor, right? So anyways, so he gets an early retirement or something, and he goes to some Caribbean island, and he buys I don't know, something. Anyways, he starts, I don't even know what to call it. He painted bikinis on girls that would rather be topless. Yeah. So anyways, interesting twist in fate for him. He became an artist, painting bikinis on topless girls on the beach. Hey. Yeah. You're like, huh. That's quite a departure from making steel. Schmelting, right? He must have had an unfortunate schmelting accident. Some of the indicators are in the day trading course, Amanda. Or Ananda. Try the day trading course, or you just pay $5 at metatraders.com. It's $5. You download it, and there's an installer that installs everything automatically. Okay. Mama, don't let your babies grow up to be steelworkers. Okay, so anyways, the other things going on here, looking for an up for a down. Over here, looking for an up for a down. Okay, just waiting. If I get it, I get it. If I don't, I don't. It's like setting traps. Sometimes you wake up and you got rabbit stew for breakfast. Other times your traps are empty. Take a look at commodities. My WTI still overbought. Right? Don't get caught up on the technicals. Everything, right? Everything here says up. Okay? Right? The only thing I'd say is I would suggest R2 was important, so people did pay attention. Okay? So pay attention also to R3, because whoever is watching this market was probably going to watch an R3, which is up there, 55 and change. 55 and 3/4. Not that it means anything. It's just we know that was the projected high based on this entry. Again, take the swing trading course. Read my book from over a decade ago. It says, in the case of this, expect that. Okay? Pretty amazing. So we know somebody took profit there. Regardless of the change in fundamentals, people still had the price plugged in. So it just shows that people are doing this. Somebody said, oh, it opened OOP, I want to grab it here, and I want to exit there. It came down, I bought it, and they're done, and they probably never even looked at it. Okay? Okay? But fundamentally, this should be higher. It was undervalued, and that was unexpected. That would explain the breach. Okay? So right now, we're riding the 4-hour 21. This is ridiculously bullish. You'd have to be a fool to sell it, like a just straight up fool when it comes to trading. Maybe you're really good at watercolor. Okay? Maybe you're great at abstract math. You're like, I'm an abstract math expert. I'm not a fool. Okay, but trading short in market conditions like this is foolish. So maybe just in that scenario. Bitty, 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 sitting around, sitting around, sitting around. Okay. And no one wants to make the move. So now this is tight. Okay, now this is tight. We got to get rid of this. Oh, no. Didn't want to get rid of that, but not meaningful anyways. There we go. And now we got a situation like this. So you want to search for the apex. Okay. You can draw it like that. It's a bit clunky to draw it that way. The other way you can do it with MT4 is this. Insert, shape, triangle, point, point, point. And the interesting thing now is you can adjust it accordingly. Okay? And the closer to the apex, the more believable the break. I don't know if you want to look at this as like an inverse flag or something like that. I don't really get caught up in all that nonsense. You either think Bitcoin's going to go up in value or you think Bitcoin's going to go down in value. If you do something because you believe this is a pattern, I don't get caught up into that. I think it's just ridiculous if you lost money if you lost somebody's money and you're like, how did you lose? How could you possibly short Bitcoin? It's up 300% this year. How the hell did you short it? Well, I saw an inverse flag pattern, so I shorted it and I lost a shitload of money. You're like, whoa, dude. Why don't you use some common sense instead of following rules like that? Okay. So in this case, the only thing I'm looking for is the closer to this apex, the more likely a breakout. I wouldn't necessarily just say one or the other. You need to make your decisions. Okay? So I never really got caught up in all these pattern things. And I noticed a lot more people in the last 6 months to a year have come to my webinars and they're really focused on patterns instead of really understanding what's happening. And I'm wondering if someone is just training all this again. But yeah, if you think that's simply because of a pattern, I think you're forcing yourself, you're painting yourself into a corner and you're not making decisions. You're like, well, I don't know anything about Bitcoin, but this pattern tells me it has to fall. I think you're avoiding the complex part of trading, and that is making a decision. I'm sorry, ma'am, I lost half your money because I saw an inverse flag pattern. Sorry, I should have just bought it like everybody else. Okay? Yeah. Right? ZC says, how do you calculate? Well, I use indicators, of course, ZC. And all they're doing is the high plus the low plus the close divided by 3 equals the central pivot point. And then from there you do 1 standard deviation below and 2 standard deviations below and 1 standard deviation above and 2 standard deviations above. And then you do midpoint, 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 and now you got it. And what I do is I connect this area and say that's an exit. I connect these areas and I say those are exits. Okay? Otherwise known as pivot profit zones, profit or profit. Okay? So the math is pretty easy. Is that right? Daniel says he sees pattern trading. So here's what I want for you guys. I want you to be an Illuminati. Okay? I want you to understand how the market works and why the market behaves the way it does. Okay? Just like I just showed you, what an amazing magic trick, right? That I just said, hocus pocus, blah, 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 dollar's going to get strength, boom. And there was no technical reason. There was no pattern for it. None so ever, right? Okay. Just like that. No pattern for it. So now you could really get caught up and say, well, because this pattern is occurring, now it has to go down. But you're like, well, you should have just known, right? And expected or something, or been prepared or anticipated, or, I mean, the way it looks is it went up to 40,000. Everyone took profit in the first week of January because they were supposed to. We talked about it 16 weeks in advance that the dollar would get strong. Well, Bitcoin coming down, by the way, is the dollar getting strong relative to Bitcoin. So we anticipated this 16 weeks in advance on this week, in this time frame. Cool. Okay? And on top of that, we said it would occur most likely by Mutual Fund Monday, right? What day is Mutual Fund Monday? Is that right, Johnny? Yeah, even USD yen, that's so old school Japanese. Yeah, it's just funny that that's got the lowest volatility. It's got high volume, but low volatility. Interesting that you would pick something like that. Yeah, the Monday after non-farm payrolls, which is right there. And remember, I explained it, right? I said the private jets are going to come back in from the Caribbean, and, right? Smart people are going to send their beautiful people home. They're going to get back to the office. They're going to they're going to discuss their rebalancing strategy and write their, their New Year letter to the customers, describing how they rebalanced everything, how 2020 was horrible for humanity, but because of your amazing alpha, you performed actually very well financially, and that you have an even better outlook for 2021. Do you guys remember this whole story? And that you're not going to tell people after. You have to take profit, then reinvest, and then send the letter out. And this is what professional hedge fund managers do in the first week or so, right? the first week of the new year. It's just part of being a hedge fund manager. Anybody remember this? Okay? And so if they spend the first week talking about it, what do they do on Mutual Fund Monday? Well, that's when everyone's back to work. Because remember, some people might come back to work on January 1st. Some might be January 2nd. Some might be January 3rd. Some might be the 4th. Some might be the 5th. And they're having their meetings and they got to discuss what they want to do. And then when do they actually do it? When all market participants are back at the table. What day is that? Mutual Fund Monday. You have to understand the ebb and flow of these markets have to do with humans. Humanity. You trade humanity's behavior. Okay? And on that day you thought dollar would get strong. Why? Profit taking. Well, dude, this just went up like 300%. Do you think there's going to be some profit taking? Yeah. Okay. So anyways, I hope something's clicked there. Okay, gold. Remember I said this one's tricky because I don't know if we can all agree. Is that an R2 or no, sorry, is that an M4 or an R1? And if it's an R1, this would be your S1. Okay, so I really don't know. Okay, so if you always wanted to be a buyer of gold since the middle of December, you can buy it now at the same price as a month ago. Right? Okay? Well, Master Trader, that's not a bad idea, and it's part of your portfolio analysis. But the interesting thing is between now and, let's say, August, I think there will be some, we're in the midst of a down, which I predicted. Then we'll be in the midst of an up. Then we'll be in the midst of some sort of down. And then we'll be in the midst of sideways. And then maybe either up and then down and up, or then down and down and then up. Okay? So like there's a lot going into it. But yeah, often January is too early for the stack and pack attitude. But you have to understand, I don't really know. Just like a farmer doesn't know the exact day to be planting seed or the exact day to harvest. But if you carry out the right strategy, meaning you make a lot of trades, you manage every trade individually, and then you pray to God there isn't a retracement or a reversal. Okay? So now you have to say, well, what kind of adjustments do you make? Are you in a negative carry or a positive carry? Because now you have to manage your trade differently. So if you're in a positive carry for 3 months and then got knocked out in April, you're like, well, at least I had a positive carry and you made some money, right? And of course your volatility is super low, so you know your Sharpe ratio is going to be okay. Right? Versus you sit on a trade for 3 months and there's a negative carry. Well, now you got to make probably, let's say, it doesn't sound like a lot, but 3 pips a day, every single day, day after day after day, as a tax of being in the position. So after 100 days, your break-even point is 300 pips. Well, obviously now, if you're thinking, if it's over 100 days, 3 months. Well, 300 pips, right, is not a small number. Over the course of a year, you'll need more than 1,000 pips to get to break even. So you're like, So you'll have to manage that differently as well. So very often what I'll do is I'll think position, but I'll try to set it up swing. And when they're both lined, then I day trade my swing up into my position. So we have to look for market conditions for that. Okay? So my thought to you, or my message to you, if that's what you're thinking of doing right now, stacking and packing yen pairs, now you said short though. No, I missed that part of your comment. No, well, I wouldn't. You can do whatever you want. Do I think all this stuff's coming down for 100 days of retracement? Not under these market conditions yet. If there's some bizarro shenanigans this weekend and on Monday as we transition power, when is it, 2 weeks from now or 1 week? I guess. So over the next couple of weeks, if there's some crazy shenanigans going on regarding the inauguration of Joe Biden, then things could get complicated, and maybe, just maybe, depending on what kind of shenanigans, right? But most likely that there would not be a long-term fundamental reason for a ginormous, 100-day retracement and everything. So I don't think that way, and I'm not thinking that way now. Of course, that could change as I learn and adapt. But the way I look at it now is almost certainly Joe Biden is coming out with bags of free money. And free money to a consumer means spending goes up. And then when spending goes up, right, the stock market goes up. So if the stock market goes up and people are spending and everybody's happy, I'll probably be short the US dollar not long. Okay? So I'm just saying this was profit taking. I never said a crash. Okay? Yeah, false rally. Again, it's like expect is a strong word. Anticipate? Okay. How about preparing for? So that might occur where you get, let's say next week you get a move like this, then we get up to a top, and then we come back down. That's what that would be all about. Okay? This year, I've explained it in my swing trading group. Very often you get like something like this occur. But because of the fundamental conditions and where we are in a business cycle as well as a political cycle and my outlook for the Biden administration, I think it'll have more chance of up this year than other years. So I don't guess, as you can see. I'm thinking. I spent a lot of time thinking. And I think this year there's much more upward pressure based on monetary and fiscal policy analysis. Okay? So I want you, when I go through a conversation like this, I want you to pay attention to like my tone, my certainty, the language that I'm using, the terms I'm using, because one day you will be a professional money manager, probably one of the best, and you will have to sit down with either your board, right, your employees, right, your contemporaries and as well as subordinates. You might have to do client meetings where you're meeting with a client and they might be unbelievably enthusiastic for the future, which you will have to temper their enthusiasm. They might have dire opinions like, oh my God, I'm going to die, or it's so terrible, or it's the end of the world kind of stuff. And you have to, once again, bring them up and say, well, in managing your money, we try to stay focused on financial facts, right? Not emotion or fear or greed or all these different things. So you always have to ground your clients or your employees and say, what do we know? What is it that we know? How do we make a logical decision as far as investing in a world that seems very irrational? Well, let's look at the current monetary policy of the Fed and our anticipated fiscal policy by the new administration. And let's put this analysis together to have an investment thesis. Okay? You will be a guiding light in a world of darkness. And that is probably the biggest form of value you can provide your clients, that you can calm them down, focus on rationality, but also give them a 12-month outlook. Maybe even a 5-year outlook like I've given you, as a framework for your investment philosophy, but also your decision-making process. Or just guess a whole lot and make a bunch of bets. One or the other. All right, so we did commodities. We did exotics. We did yens. We did dollars. I'll take a couple of requests, and then I think we're out. I have to go for another torture session this morning. I think it's at 10. I can't remember. I guess I should know these things. Nothing like showing up early for a torture session. Oh, that's okay. I'll wait. Excuse me, ma'am. What's your Wi-Fi password? Right? And you just sit there like a chump waiting. I was thinking about going in, with a medical mask. You go in with the medical mask, right? And then once they're done, I thought about putting the mask back on as I'm leaving. Can you imagine this now? And I go out, and there's the checkout counter, and they have to reschedule you for your next appointment. Maybe you have to pay some money or something like that. So I come back now. Remember, I want them to see me when I come in, and I got the white medical mask. But I should carry a second one with, like, blood all over it. So now I come out of, the dentist area and come back out to the front desk to get my little baggie full of treats and set my next appointment and just have blood all over the white mask. I'm like, what? Is everything okay, ma'am? Oh my God. What? Is everything okay? Yeah, I need to reschedule. How about in 3 months? Oh my God, you're bleeding. Oh my God, you're bleeding. Yeah. Well, I know it works because I did it at Walmart. No, I didn't do it at Walmart. I did tell you, though, I went to a Walmart, 3 weeks ago? Man, what an interesting experience. It's amazing, that place. They have these bins in the middle of the main aisle, the runway, the main highway around the store. They have these giant bins just full of DVDs. Like, find your own DVD. Just reach in like this garbage bin and pull out a DVD for $3. You're like, oh my God, Daddy's home too. I just gotta own this. I gotta own it. I have to own. Right? I know what you did last summer 3. I have to own it. It's only $3. I just have to go through this giant garbage bin. Like, it's so funny, that place. What if Walmart is so weird, but I couldn't believe it. I'm standing there. Some weird, cheap Chinese brand of TV, but 70-inch 4K TV for $398. I just couldn't believe it. 70-inch 4K for $400. I just couldn't believe it. Wow. Wow. And then what do? You have to put it in your cart or something. Like, I don't even get it. They're like, it's a pallet. Pick it up yourself. Wow. Just a weird world, man. Holy crap. Good place to be poor, though. Telling you. Can you guys in South Africa buy a 70-inch, I don't even know what that is in centimeters, 70-inch 4K TV for cheap? Can you do that in South Africa? Yeah, Michael, I've seen a couple of those. Those are pretty interesting. How much USD do you need in South Africa to buy a 70-inch 4K TV? We should compare it, do a foreign, use that as an example in the training maybe. You guys are like, but how much is it though? Cruise into your local electronics store in Jayburg. Ash, which one? I think any major news outlet, but I used to use Bloomberg. Okay? I used to use Bloomberg, but it's so scammy, scummy, clickbait crap now, which really bothers me because I used to prefer, not prefer, but I liked Bloomberg. But now it's just really scammy, scummy, clickbait crap. So I've been using CNBC's app. Yeah, you don't use inches, I know, but it's almost like the biggest TV you can buy. The next one's up, right? So 70 inches to centimeter. Okay, 180 centimeters. 180 cm 4K. On says CNBC isn't better. So anyways, I get to the headlines. And yeah. Who wants the forecast? Okay, I'm going to do some training here. And I'm going to mark this, I guess. Create highlight. I forget how to do this. No. Okay, I have to do it after, I guess. So I'm going to mark this. Okay. So I just got a question about what website. We were talking like, do you use Bloomberg? Do you use CNBC? What do you use for headline news? And then someone says, what website to look for Fed interest rate forecasts? Okay, well, let's just do this. So we want Fed Watch. Oop. Here's me. Okay, Fed Watch tool. So let's take a look at this Fed Watch tool right here. Boom, 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 boom. Okay, this is, this tool by the CME Group looks at the contracts, essentially, signed between smart money investors. This is banks loaning other banks money so that they can meet their Fed requirements. Okay? This is Bank of America lending JP Morgan money for a day because balances increase and decrease all the time. 24 hours a day at a bank, right? But they're supposed to have a certain amount of money parked at the Fed. So every day at rollover or when they close their books, they calculate, we need to add some more money to the Fed. Or they say, we have too much money at the Fed. And then bank managers have to make decisions, okay? But very often what they need is just, let's pull back even further. Banks make money because you give them money. We call it a deposit. It's not a loan, okay? You deposit money at the bank and they're like, we're going to pay you 1%, let's say. Meanwhile, they lend the money to businesses or citizens that borrow the money in the form of a loan to pay for things like real estate. So asset-backed securities. Okay? Right? A loan is a security backed up by the value of your house. So the loan on the books might be worth 75% of the value of your home. So if you default, they can sell your house for 25% cheaper than it should be, which means they can sell your house in a day, pay back the loan. Meanwhile, you're out on the streets again with bad credit. Okay, so that's how the whole thing works. You give them money, kind of like a loan, but not. You give them money in the form of a deposit. Now they have all this money. It's not likely you're going to show up and say, give me my retirement money back. Give me my savings account back. Okay? So anyways, what they do is then they lend it in the form of a loan. Now that loan is locked in for 30 years. You could show up tomorrow and say, give me all my cash. I want to withdraw all my cash. I'm walking away. It could happen today, tomorrow. They just never know. But most likely you won't show up over the course of 10, 20, 30 years and say, give me all my cash. Okay? So they pay you a little bit on the front end and then they loan it out. So they're short cash, they're long loans. Okay? So every once in a while you do show up and withdraw money, or a whole bunch of people show up and withdraw money, but all that money is locked into loans. So a bank could say, well, hey, I can go to another bank and borrow some money from them to make sure I'm all squared away with the Fed, because you have performing loans, you have cash flow coming in. You just need a little bit of help to cover your short-term liabilities, because right now, you're short on deposits. Now, a bank will also have money invested in things like bonds. Not 100% of deposits are in loans. So they just need a day or two to sell off some bonds, get some cash, right? So they're picking up, they're paying you 1%, but they're picking up 3% in a corporate bond, or I don't even know, are they allowed to buy that? Anyways, they're paying you 1%, they're picking up 3% on a safe loan, they're picking up 5% on a mortgage, and that's how they manage the time-based liabilities, right? So a bank will say, well, I need a day or two to liquidate some of my bond holdings so I have enough cash to cover my liabilities. So I need to borrow for a day or two. And they go to another bank who just happens to have a surplus. And they don't want to lock it into a bond. And there's no one to really loan money to today for loans. They just have this excess capital and they can pick up a quick buck. Bank of America lends it to JP Morgan. JP Morgan's not going to go bankrupt over the next 2 days. And then you'll get your money back plus a little something for your trouble. Easy peasy, right? Cool. Well, that contract is negotiated between bankers. Well, what if you thought tomorrow interest rates were going to go up? What kind of deal would you negotiate today? Based on today's interest rates? Or tomorrow's interest rates, or a hybrid, because you're like, well, I can loan you money today, but then you're locked in owing me money at the old rate, where if I just waited a day to loan it to you, you'd have to pay it at the higher rate. So I don't want to loan you money today. I'll loan you money tomorrow. And they're like, oh my God, I totally understand the situation you're in, but I need the money today. And they're like, well, okay, let's negotiate price here. and you come up with some hybrid plan. Now, in finance, it's just math. You can just calculate based on things like the time value of money, the value of a one-day loan at today's rate, and then other, depending on how many days, what the value of the cash flow would be after the interest rate changed. And you just calculate the money and boom. And bankers are very like that. The only thing that changes is the discount rate and all that kind of stuff. Discount not meaning the Fed discount window, but your opportunity cost and such. But what I'm getting to is it's all mathematical. They're like, what's the time value of money today at this interest rate? What's the time value of money into the future at that other interest rate? Okay. And it's the change of interest rate that and how much time is involved comes up with an exact price. Bankers, real estate investors know this too. You look at a building and say, okay, what's the cash flows on this building? And then they go $3,658,322.72 is how much that's worth. Okay? Finance will tell you exactly the value of something if you understand the time value of money. Okay? And the change in interest rates, which would impact that over time. Great. So now we're looking at the interest rate and the time. Okay? So what if now a bank was borrowing money from another bank, not for overnight, but how about for a month? Or how about 3 months? How about 6 months? Okay? Typically in the course of a month, a couple of months, 3 months, 6 months, there would be a perceived change in interest rates. Okay? And maybe there's agreement and disagreement like in the future. Okay? Now, right now, the Fed is telling us exactly what to think, but things can change and people can have an opinion about that. And therefore, they would have a different opinion on what the Fed would do. When will the Fed raise interest rates? 2 years, 3 years, 4 years, 5 years. Most people would say within 5 years, the Fed would raise interest rates. What day? Which meeting? Ooh. Is it going to be 3 years from now? And then if it is 3 years from now, what meeting? What month will interest rates go up? Well, now you get to have a divergence in opinion, because at that point it's an opinion. Okay, is it 2024? Well, is it the January or the June meeting? Or is it the December meeting? Or a meeting in between? Okay? And what your opinion would change what you negotiate. So finance being the study of cash flow, okay, over time, because that's what flow means, cash over the period of time, and time impacts the value of money, right? And interest rates also dictate the cost of borrowing. You add all this up and having uncertainty on when these things will change, you can look at the price of the agreements between these smart money participants. Remember, this isn't dumb money. This isn't real retail traders. This isn't hedge funds. This is banker to banker. Okay? Cool. So now you can look at the price they negotiated in these agreements, okay, and figure out what their assumed interest rate will be. So if you go out all the way to September of 2021, some people, not many, some people think interest rates will be higher. And remember, it's not opinion. These are negotiated contracts worth billions and billions and billions of dollars. See, if you go to June, nobody in the United States thinks interest rates will be higher. If you go to April, nobody in the United States thinks they're not investing and negotiating deals with each other like interest rates are going up. Now you go all the way to September of next year, a small percentage of these deals, 3.1% versus 96.9%, a small number of the deals have been negotiated as if interest rates go up by a quarter point. Aha! With this information, you don't need to listen to the media or a talking head and say, hey, when do you think interest rates are going to go up? Who cares? I don't care what people think. These are negotiated multi-billion-dollar contracts. Contracts! Okay? Based on the time value of money calculating this price, 99.925. Well, to get to that number, okay, if you reverse engineer the math, it's saying some people think interest rates will start going up in September. Not many, but some. And if we can go out further, let's say if we could go out to September 2022 or September 2023, this number certainly would be higher. And we know what they're thinking based on how they're spending actual money. Do you understand? It's smart money, billion-dollar deals being negotiated all the way out to September. And from that, we know exactly what they've negotiated in their contract. The possibility of interest rates going up by a quarter point in September of next year. 100% factual financial mathematics can tell you that. Nice, right? Hey, can I get a high five for that? Now you know how to think like smart money. So I'm trying to answer the question, where do you go to read some sort of report about interest rates going up? You don't need that. You have those facts. You can speak factually about this information. Okay? And now you've become an expert because you can do the math. And now you can speak in front of your friends, your families, potential clients. You can go on TV and say, well, our analysis of the Fed funds futures market shows that interest rates are still not likely to go up in 2021, mostly because the Fed said they won't, but there's just the smallest inkling of people getting ready for that to happen. And by the way, I'm going to be heavily short the dollar when that happens. Oh my gosh! Oh my gosh, what? Interest rates going up and you're going to start shorting the dollar? Oh yeah, I'm going to start shorting the dollar way out in August. Front running this because once the media picks up the slight change in probability of interest rates going up, that's the beginning. And when that happens, in my opinion, and for many people that don't understand macroeconomics, they'll say that doesn't make sense. Interest rates in the United States going up means the dollar should weaken. No. I know that makes sense. I mean, I said that backwards. You think because interest rates are perceived as going up, the dollar should strengthen, right? Higher interest rates or perceived higher interest rates or perceived higher interest rates coming soon would increase the value of the dollar, and that's not right. It's not right. It sounds right. It's not right. It's easy to believe that, but it's not right. Now, if you're talking about Canada, sure, that would make sense. If you're talking about the Polish zloty, yeah, that would make sense. The reserve currency of the entire world, the currency of the largest economy in the world, one based on import and exports? No. What that means is the dollar will weaken. Isn't that nice? So let me book that so that we have it forever. By the way, click the thumbs up button if you appreciated that knowledge. Okay, let me go back here. Hang on, I'm making a thing. I'm doing a thing. Hang on. Should go back a little more. A little more, a little more, a little more, a little more. Wait for it. Okay, somewhere in there. Let's see what this sounds like. This is, there's no sound, okay? By the CME Group, looks at the contracts, essentially, signed between smart money investors. This is banks loaning other banks money. There we go. So that's 4K. On says CNBC isn't better. So anyways, I get to the headlines. And yeah. Who wants the forecast? Okay, I'm going to do some training. Okay, let me book that like that. All right, so I think I can do that now. Do I have to test it first? How do I hit create? No. It won't let me create now. What? Oh, I have to do a title. How to think like smart money investors. Guess that. Okay, cool. All right, so I just saved that. Cool. That's neat. It's a neat feature, right? Cool. La 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 la. Okay, big drop in Brenty. That's what happens. Cool. So I guess we're done for the day. I don't know if I have to go leave right now for my torture session, or maybe it's in an hour, but I got to get going. So thank you for being on my team. Would you please subscribe? Would you please like? Would you please leave a comment? All these activities shows YouTube that you believe this is quality content. We're like the least promoted investment channel on YouTube. Not sure why. I try my best every day to give you solid value. So anyways, and of course, thank Traders Way for being part of our community as well. Thank you, tradersway.com. I've been working with them now, 6 years? It's pretty amazing. So, peace on earth. May the pips be with you. May your profits be above average. Tomorrow is a Thursday, so we got a swing trading group meeting. Oh, faux show! Can't wait for it. So, I'll see you